Ladies and gentlemen, good day, and welcome to the High-Tech Pipes Ltd Q1FY27 earnings conference call. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Anish Bansal, Full-Time Director from High-Tech Pipes Ltd. Thank you, and over to you, sir.
Good morning, ladies and gentlemen. On behalf of the Board of Directors, I extend a warm welcome to all of you to the earnings conference call of the company for the first quarter of FY27. I'm joined today by Mr. Arvind Bansal, Executive Director and Group CFO. I'm pleased to share that despite the challenges arising from Iran war, the company has started FY27 on a strong note, with healthy growth in volumes, revenue, and EBITDA. The performance during the quarter reflects sustained demand across key end-user industries, successful ramp-up of our recently added capacities, and continued focus on operational efficiency. Coming to our operational performance, the company achieved sales volume of 156,136 metric tons in Q1 FY27, compared with 124,000 metric tons in Q1 FY26, registering a strong growth of 26% year-on-year. This growth was supported by robust demand, particularly from the infrastructure and construction sectors, along with the increasing contribution from our expanded manufacturing capacities. Coming to the financial performance, the company reported revenue of rupees 1,413 crores in Q1 FY27, compared with rupees 791 crores in Q1 FY26, registering a strong growth of 79% year-on-year. Profit after tax stood at rupees 20 crores in Q1 FY27 compared to rupees 20.92 crores in Q1 FY26. Our EBITDA increased by 20% to rupees 49.37 crores in Q1 FY27 compared with rupees 41 crores in Q1 FY26. Further, EBITDA per ton improved marginally to rupees 3,162 per ton in Q1 FY27 compared with rupees 3,148 per ton in Q4 FY26. This improvement reflects our continued focus on operational efficiency, product mix, and cost management. During the quarter, we continued to strengthen our product portfolio. We have added several new sizes, especially in jumbo hollow sections and customer relations, with increasing focus on value-added and differentiated products and opportunities across infrastructure, construction, water, energy, and other industrial applications. We are also continuing to develop our domestic and export markets while taking steps towards greater energy efficiency and adoption of cleaner energy sources across our operations. Moving towards our expansion initiatives, the company remains fully committed to its long-term growth vision of achieving 2 million tons capacity by FY29. As part of this roadmap, we plan to add another 1 million tons of capacity in next 2 to 3 years. The execution of this expansion program is progressing at a rapid pace, and we remain focused on commissioning the plant capacities in a phased and disciplined manner. The Direct Forming Technology Facility, DFT, at Sanand Unit 2, Phase 3 is progressing as planned and is expected to be operational by Q3 FY27. This facility will further enhance our capabilities and capacities in high-quality pipe segments and improve our ability to cater to evolving customer requirements. The API Pipes facility is also progressing as planned, with readiness expected by Q4 of this current financial year. This facility will provide us with an opportunity to participate in the specialized pipe applications, particularly in the oil and gas transportation segment, and further strengthen our value-added portfolio. At our Hindupur, Andhra Pradesh facility, construction activities are progressing well. The integrated manufacturing facility of VRW tubes, specialized solar tubes, and other value-added steel products is expected to become operational by Q4 FY27. These projects are important milestones in our growth journey and will provide the company with additional capacity, product capabilities, and opportunities to serve larger and more specialized customer requirements. Outlook. Looking ahead, we remain optimistic about the structural growth opportunities in the steel tubes and pipes industry. The continued development of infrastructure growth in construction activity, renewable energy expansion, and rising industrial demand are expected to provide strong long-term growth opportunities for the sector. With our capacity expansion program progressing well, newly added capacities ramping up, specialized facilities moving towards commissioning, and our financial position further strengthened through the preferential issue, we believe the company is well positioned to capitalize on the opportunities ahead. I now request the moderator to open the floor for the question and answer session. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, please press star and one. We take the first question from the line of Nupur Sharma, an individual investor. Please go ahead.
Hello, sir. I have one question that how are you viewing the demand environment across infrastructures, construction, water, solar, and other industrial segments for the remainder of FY27?
Hi, good morning, Nupur. The demand from the infrastructure and construction sector remains very strong. Now we are seeing a lot of new projects which were earlier on hold. Now they are coming on shape now. And going forward, I think for us, next 2 to 3 quarters will be quite crucial when it comes to infrastructure and construction. And whereas solar is concerned, we are gaining share in the solar segment. And we'll be adding, more lines in this year, which will further establish our footprint in the solar torque tubes segment.
Okay. All right. Thank you.
Thank you.
Thank you. We take the next question from the line of Manan Poladia from MKP Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. I just have 2 questions for you. First, on the product mix within VAP and otherwise, if you could give us a breakup of the industries that you are catering to right now, and if you see any new industries emerging as customers in the near future. That's one thing. And secondly, on the EBITDA per ton, I think we've come in at 3,200 this quarter. I'm just curious if you could provide some timeline as to where we see this ramping up to, say, 37,000, 4,000 rupees a ton. That'd be great.
Yes.
Thank you.
Thank you. Good morning, Manan. So your first question, relating to product mix. So, for us, our end applications, like 50% of our end applications is towards construction and infrastructure sector. And 20% is like water and oil and gas transportation. And the balance will come from engineering, solar, and other specialized segments. So this is one. The new segment where we are seeing some green shoots is the data centers. Now we are seeing a lot of new inquiries for large hollow sections for data centers, and we have matured some orders there. And going forward, I see this will be a exciting new space for our company. Regarding EBITDA per ton, so this quarter, despite the challenges arising from the elevated gas prices, we are still able to maintain the EBITDA of around 3,200 rupees per ton. So what I believe is, we have recently operationalized 3 of the plants. So our first focus was that we maintain the capacity utilization at these plants. So we have offered some extra special rebates to our dealers just to penetrate in the market. So as they are able to penetrate and and our product presence increases, EBITDA per ton will surely go upwards of 4,000 rupees per ton.
Right. So just one quick follow-up on that. For the data center large hollow sections, if you could provide some quantitative guidance for, say, even the next year, FY28, I think that would, like, help.
So, in this new segment, what I'm eyeing is, to start with, about 15 to 20,000 tons for this financial year, and this will grow organically going forward. So I can't name the projects, but I cannot name the projects, but these are like big gigawatt scale data centers that I'm talking about.
Right. Thank you. That's helpful.
Thank you, Manu.
Thank you. We take the next question from the line of Karthik, an individual investor. Please go ahead.
Hello, good morning.
Good morning.
I have a question that the company has outlined its vision of reaching 2 million tons of capacity. Could you give me an update on the progress of various expansion projects and your confidence about achieving the financial year 29 capacity target? And also, do you see the incremental capacity being absorbed primarily by the domestic demand, or do you expect exports to play a larger role? This is my question, sir.
Thank you so much. So first, your question relating to 2 million tons capacity. Yes, we are very confident, and we hope this we'll meet this FY29 target quite comfortably. So the expansion projects are going on in our UP facility, in our Andhra plant, and our Gujarat facility right now as we speak. And with all this, another 0.5 million tons is set to start construction by end of this financial year. So FY29 target, we are very, very confident that we'll achieve that. And this new capacities will primarily get absorbed in the domestic demand, but with that, our percentage of export share is also rising. So the company has just stepped into the international markets since last 1.5 to 2 years, and the response is phenomenal. And our long-term target is that the 10% of our total sales volumes comes from the international market. So that will remain there. Thank you.
Thank you, sir.
Thank you. We take the next question from the line of Vikas Arora, an individual investor. Please go ahead.
Hi, sir. Good morning.
Yeah, good morning.
I have one question regarding the EBITDA. So the current quarter EBITDA has 3,160. So while you are ramping up the new capacities and you are saying that product mix also improving, so just want to know how the product EBITDA will improve further and what will be the optimistic level for with this ramped up capacity. So my question on this, sir.
Yeah, thank you, Mr. Arora. So basically, our target is to reach 4,000 rupees per ton. This Q1, we have faced, a lot of headwinds when it comes to energy costs, especially the gas prices. Gas prices have more than doubled, which is impacting our total EBITDA. And along with this, the logistic costs and the ocean freights have gone significantly higher. And these 3 new plants that we have operationalized, I think, once we reach the, critical mass, we'll stop offering the discounts, the additional discounts that we are offering, and, we'll be moving in that 4,000 rupees band.
Okay, sir. Thank you. Thank you, sir.
Thank you. We take the next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good morning, Anil. So, couple of questions. First was on the volume guidance for 27 and 28 and 29 also, if that's possible.
Yeah, good morning. Good morning, Pallav. So, this year we are targeting a sales volume of 6.5 to 7 lakh tons. And for FY28, we are targeting 1 million tons of sales volume.
Okay, and so in 29, will we have any volumes from the additional 1 million ton, the new expansion?
Yes, but that will come in the H2 of FY29. So, I'll restrict to FY28, and beyond that, we'll see, when the fresh capacities get installed.
Okay. And what are the capex targets, for reaching this capacity?
So total capex is around 650 crores for this 1 million tons, and out of which we'll be doing about 200 crores of capex for this financial year.
Okay. And the balance probably will be spread over 28 and 29.
Yeah, and some of it has been incurred in the previous year also.
Okay, fair. And I think a VAP right now is about 35%. So with DFT, etc. coming in, so I think we were earlier targeting a 50% share of VAP. So when can we reach that in FY27 itself?
So DFT will come in the end of Q3, and and I think we'll get the full benefit of DFT in FY28. So this 45 to 50% target is for FY28 for VAP.
Okay, so then our EBITDA per ton should gradually move to 4,000. Probably exit rate maybe closer to 4,000 by the end of FY28.
Correct.
Sure. And lastly, sir, I just want to understand, there's been in the purchase of stock in trade, I think 4Q was a very high number of 420 crores, and that has come down to 280 crores. So, what exactly is the nature of this, purchase of stock in trade?
So basically, this there is this quantity, 100 to 150 crores has been there, in the previous quarters also. There was this, some import consignment that we had, but due to geopolitical situation, the company decided to dispose it in the high seas also. So this is relating to that, and as we are going forward, this will keep on coming down. So 50 to 100 crores is what it will be.
Okay. And lastly, just, I think on the blended realization, if I just, divide the revenues by the volumes, it's still a pretty high number, It comes to about 90,500 rupees per ton, which is significantly, higher than, the peers. So is this because, we are selling some value-added pipes, or this will normalize going ahead?
Yeah. So, this, 1100, so it will come around 75,000 rupees, our sales utilization.
Okay. But the EBITDA per ton should improve, so.
Yes, sir. Yes, sir.
Despite the drop in revenue. Because this, maybe the purchase of stock and trade also will come down.
Yeah.
That's the way to look at it. Okay. Yeah, thank you so much.
Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1. We take the next question from the line of Lokesh Kashkar from Smith's Institutional Equities. Please go ahead.
Yeah, hi, sir. Congratulations on the...
Lokesh, I'm sorry to interrupt you, but your audio is not clear. Could you please use your handset and proceed with your question?
It is better now?
This is better. Please go ahead.
Yeah, hi, sir. Congratulations on the good volume growth during the quarter. Just wanted to, check from your side, as you have guided for around 6.5 to 7 lakh tons of sales volume for FY27. How has been the month of July and YTD level of August for you now, considering that there has been a monsoon in the major part of the country? So how has been the volumes during these recent months?
Good morning, Lokesh. Thank you. So this year, this quarter also, I see a similar sort of, volume what we have done in Q1. But, once this monsoon and this geopolitical situation, this softens, I think H2 for us will be a good half yearly period to expand our volumes in H2.
Okay.
So basically, Q1, Q2 will be similar, but then Q3, Q4 will be relatively much stronger.
Okay. Secondly, sir, when you are talking about, capacity expansion in the value-added segment, so most of the segments are, from 1 million to 2 million tons. So each and every capacity is coming via DFT, or there is some capacity which is coming via the traditional methods as well? So need some light on that.
Yeah. So there are three targets for this high margin business. So one is the DFT, of course. Second is as I mentioned in my speech earlier, we are pouring into the API pipe segment, which is a big segment, and especially after the war situation, I think the demand for oil and gas pipelines will increase significantly. So we are entering into this segment. And third is the coated steel segment, where we are doing, the specialized coated roofing sheets and coated tubes and pipes. So this is another third vertical for us. Apart from this, the fourth is, the solar torque tubes segment, and the company has a very strong presence in this segment, and we'll try to fortify this segment and try to give offer our products on a pan-India basis. Thank you, Lokesh.
Okay. Yeah, but let's say if I am to divide, this additional 1 million tons of capacity into these four segments, so where majority of these capacity is coming into? And what is the margin specifically in this?
So major will be the DFT and the coated steel segment. This will form major, and API also, because it'll take couple of months for the approvals and all. But going forward, API should contribute significantly to the company's bottom line.
Okay. And the margins are very much different into this segment?
Yeah, of course. DFT and API, I think, the current situation is around 4,500 rupees to 5,000 rupees per ton, EBITDA per ton. And API is 6,000 upwards.
Okay. Just last question from my side. So your finance cost is basically has been closer to around 15 crores in Q4 as well as Q1. But if you look at our debt level during the last year, and it was closer to 27 crores. So finance cost comes to closer to 17-18% of your debt. So what is the reason it comes to that high level?
So, Lokesh, we have just commissioned these three facilities, and the working capital and all, it is showing for this quarter, but it will get normalized for the rest of the year. This is the three plants have operationalized at the same time in a span of 4 to 5 months. So that is why it is showing high. But then once the the generation and the utilization reaches its optimum level, it will come down automatically.
So what was the debt level at Q1 end, and what your expectation that debt will come down?
So I think it should remain where it is, approximately, it's primarily working capital that is there. So, as the company, as the volumes are going up and, with this 1.5-2 million tons of capacity that we are seeing, so it will increase, but not to the tune of, it'll, on a per ton basis, it will come down.
Sure. And so on last CapEx, last quarter you were told that total CapEx requirement would be 300 crores, and now you have said that it would be 650 crores. So is there a change in the plans of this CapEx?
Sorry, can you repeat that?
During the last phone call, you have guided that from 1 million tons to 2 million tons, total remaining CapEx was closer to 300 crores. Out of which you were expected 100 crores during FY27. But now you have said that the total CapEx requirement is 650 crores. So is there any change in the CapEx guidance?
No. So basically, the total CapEx, we have incurred in FY26 also. So leaving that, 350 crores is remaining for the 2 financial years.
Okay.
Thank you.
Thank you.
Thank you. Participants, a reminder, if you wish to ask a question, please press star and 1. We take the next question from the line of Shruti Arora, an individual investor. Please go ahead.
Hello?
Yes, good morning.
Hello. Yeah. Hi, sir. Good morning. So my question is, could you please give us some colors on the company's current export business? What is the approximate contribution of exports to overall revenue, and how do you see this evolving over the next 2 years? Which export markets are currently offering the strongest opportunities for the company?
Yeah, good morning. So it's been 1.5 years since company has entered into the international business, and the response is very good and very heartening. Wherever the products we are exported, so we are getting repeat orders from the clients and customers. So, our in next 2 to 3 years, what I believe is that, we have the potential to, get 10% of our revenue from the international markets. And, we are opening new markets, for us, and new segments also, for all our products. Solar also, we have started exports in this year. And, going forward, I think, it will be a big chunk for the company. So 10% is what we are looking forward in the total revenue. Your second question, which relates to which markets. So, mainly, we are eyeing European, American, Canada, and the Australian markets as of now. They offer the best opportunities for the Indian steel tubes and pipes as of now.
Okay. Thank you, sir. And my last question is, and in Q1FY27, as volume grows to 26% to 156,000 metric tons, with the ramp up of new capacities, what volume growth or full year volume target are you currently guiding for financial year 27?
So this way we are eyeing a sales volume of 6.5 to 7 lakh tons for this financial year.
Hello?
Yes, Shruti, does that answer your question?
Yes, sir. Okay, sure. Thank you. Understood. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Anish Bansal for his closing comments.
On behalf of the board and management team, I would like to sincerely thank all our stakeholders for their continued trust, confidence, and support. We look forward to the continued growth journey of the company and remain committed to creating sustainable long-term value for all our stakeholders. Thank you.
Thank you. On behalf of Hi-Tech Pipes Ltd, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.